So that's it for housekeeping. There's going to be lots of next slide, please, because we're not doing it during using the webinar. We've decided to go with just a Teams meeting. So thank you, Nod. So today what we're going to do is we're going to try to explain to you what we're trying to achieve with Fairfield Finance, but specifically with this investment in technology. And then some of the observations that we have around the sector, and then how we're going to go about achieving it and what the next steps are for you as suppliers of technology to the sector. But we've also got on the call some investors, some impact investors, who we've invited to come and join this call so that they can see some of the things that we're planning to do and more become apparent about the role that we would like to play with impact investors as we move forward. But I'm going to hand over now to Holly, who's going to talk us through Fairfield Finance.
Hiya. Hi everyone. So for those of you I haven't met, I'm Holly Piper, so I'm Investment Director here at Fairfield Finance, and I have been with Fairfield for coming up for 2 years actually. So I joined in June 2020. At the time, I thought I was joining at the end of lockdown, which will serve me right for kind of being slightly smug about that. And my background is in social investment. So I used to run quite an active social investment fund called CAF Ventures, and before that had a kind of a career in the corporate sector. So that's me. Just in terms of kind of, for those of you not familiar with kind of Fairfield Finance, we're a bit of a strange beast. So we thought it's worthwhile explaining a little bit more about why we were set up in the first place and kind of, you know, who we are. So our mission is a bit of a mouthful, but very, very kind of firmly intended, which is we were founded, you know, and by government in 2019 to increase the financial well-being of the most vulnerable people in society by increasing access to fair, affordable and appropriate financial products and services. So basically, we don't think the provision of financial products and services is fair, affordable or appropriate. We think lots and lots of people get left behind. Some kind of 14 million people in the UK coming out of COVID are in really vulnerable financial circumstances. And that's kind of what we're really seeking to address in kind of all of our work. For those of you who are already familiar with what we're doing, you'll know that there are lots of different strands of our work. There's a lot on our website that kind of describes that kind of a bit more broadly. But I guess kind of, you know, for the purposes of this call, it's that kind of that overall focus on kind of serving kind of vulnerable customers. And we've got some money behind that intention as well. So we have about 100 million. From government at the moment, and of that we've put an initial 5 million allocation towards these technology investments, but we can kind of come onto that in a kind of a little bit. Probably a couple of things that's just worth spending a tiny bit more time on because they're not immediately apparent. So when we're talking about customers in vulnerable financial circumstances, we very broadly mean but lowest 40% of income and one other characteristic of likely vulnerability. So that could be you're in social housing, could be you're a lone parent with dependent children, or it could be you're seeking to borrow up to £1,000, because that tends to be a real indicator of kind of you know, financial hardship. And you know, a lot of the providers on this call won't necessarily be lenders directly, but there'll be organisations, so technology providers, working with the community finance sector, parts of the kind of the commercial sector, who are seeking to kind of serve these customers kind of directly. A couple of other things just kind of worth flagging. One is the nature of our funding. So dormant asset funding means our focus is England only. We absolutely and have done and will do invest in organisations which are nationwide, so across the UK, as well as some organisations that are working internationally as well. But the majority of the impact for, say, the community finance providers are working with needs to be for kind of beneficiaries living in England. And that just means that kind of actually for the kind of, you know, the technology providers we're supporting, we just asked to see kind of how that's kind of being evidenced. That's not, we've got nothing personal against any of the other nations of the UK. It's just the nature of our funding is kind of why that focus is there. And the other thing that's worth flagging is, which I'll come back to at the end actually, is because we have public money, so we're independent from government, we're not part of government, but we do have public money. That means we're kind of bound by the subsidy rules, which replace the previous kind of state aid regime. And I'll kind of come back to that at the end as well. Yeah, no, Nadia, you're right on it. Back to Jonathan.
Thanks, Holly. Yeah, so why are we investing in technology? Why are we, as Fair for All Finance, focused on technology? Well, it's very clear that technology is playing an increasingly important part in financial services. In fact, many banks will call themselves technology companies first and banks second. And that's something that's been going back to the 1990s. So on that basis, technology has to be a critical component in us achieving our mission of financial inclusion. It's such a critical part of financial services. And we see community finance as being a necessary and important part in achieving financial inclusion. It's covering a part of the market that is currently underserved by mainstream finance. And in order for them to be relevant in today's world, the community finance providers must have more of a digital presence. And that means they need a multi-channel offering. Historically, they've been very branch-based, but as people expect more and are used to engaging with financial organizations on a digital basis, we believe that community finance also needs to adopt that. In order to give people who aren't able to afford to make it into or to be accepted by mainstream finance a positive, aspirational consumer journey, a digital experience. And we know through working with community finance providers that a large majority are embarking on or are in the it's in their plans to go through a digital transformation, and they can be varying degrees of digital transformation. And the sector, as we are just about to explain through our survey, is underserved by technology suppliers, and there are various reasons for that. Again, we'll touch on that in a second. And our ambition, in order to achieve our mission, is to not necessarily find the winner, the technology supplier that is going to win in the market, but we want to build a market. We want to build a market of competitive, modern, progressive technology companies who are actively seeking to serve this sector of financial services. But ultimately, our investments are going to help those people that Holly's described, those people in financially vulnerable circumstances. Next slide, please, Nard. So some of us, or most of us actually, in Fair for All Finance are new to the community finance sector. And one of the things that we did to really better understand how technology is used in community finance was ran a survey. So we ran a survey back in November 2020, which we published last year, 2021. And it gave us some very clear direction, some very clear guidance as to what really matters and what the real issues are with technology in the community finance sector. I'm just going to, could whoever is not on mute go on mute? I'll put you on mute. There we go. So the three key findings, and Shanika, my colleague, is going to go through more details in a second, but the three key findings were that the sector is largely dependent on legacy technologies, and these are technologies that have been built in some cases in the 1990s, mainly in the early 2000s. And we are being told are frustrating lenders and their desire to grow and innovate. And also that technology capability is low in community finance. And that's not a criticism of community finance providers, because a lot of the lenders will have teams of fewer than 10. And so it's hardly surprising when they don't have a technology person in their team, albeit that makes it harder for suppliers to engage at a technology level with the community finance providers. And the third and really important point, particularly for this audience, is that funding for technology in community finance providers is tight, and they've cited it as the main barrier to change. And if we look at the lenders that we surveyed, 50% of them had IT budgets, annual IT budgets of under £50,000, which, when you consider that they're a financial services organisation with regulatory requirements and reporting, and that they are managing money and consumers in financial services, that's a very tight budget to operate in. And it goes some way to explaining why it's a hard sector for suppliers to engage with, and why, and one of the reasons why it's been underserved as a sector by technology suppliers. I'm now going to hand over to Shanika, who will take us through more detail on the survey.
Thanks, Jonathan. So my name's Shanika Dice. I'm the Digital Innovations Lead at Fair for All Finance. My background, very briefly, is as a technology consultant. That was in corporate for 15 years and in the social sector for about 7. So as Jonathan mentioned, I'll touch on a couple of points that came out from that survey. The full report is actually on our website, so if you'd like more detail, you can take a look there. So on this slide, what we've found is, well, a quick description of this is, even though the application of technology in the sector has been rough, patchy and inconsistent in terms of who they use, and largely constrained by legacy suppliers, there's no shortage of ambition in the sector. So with the graph on the left, we can see that 70% of people or of organizations want to use technology more extensively. And over the next 5 years, 67% think that technology will be pivotal in their business success. And moving on to the next slide, if you could, Nod. We can see on the slide, on the graph on the left, that over a third of lenders have significant plans for their technology. But that said, 52% are taking more of a tactical approach and making changes more incrementally. And we see that with the strategic technology planning, where just under 50% don't have an IT strategy. So from this, and from some of the responses on the survey, we saw that while most are planning to get off their legacy systems, that's been more of their focus rather than moving on to new solutions. So when we've broken it down by life cycle on this slide, we've taken it as 3 separate pillars. So that is consumer engagement, decisioning, and back office. And looking at some of the success factors for those 3 pillars, you can see we've got increased awareness, improved accessibility, etc. for consumer engagement. With decisioning, we're looking for it to be fast, accurate, fair, and inclusive. And with the back office, efficient, accurate, and informative. So when it came to supplier satisfaction, we found that both with consumer engagement and decisioning, the satisfaction was good. But when it came to the back office, the satisfaction was neutral at best. And that's taken us into how we've decided to focus on our investments. And Jonathan will take us a bit more through some of the details there.
Thanks, Shanika. So yes, exactly that. We are focusing our investments on loan management systems in this first round of funding. And so why loan management systems? Well, it is the pillar of those 3 pillars. It's the pillar that is most poorly served by modern technology platforms. We are seeing new suppliers emerge in decisioning and in consumer engagement. But in terms of the back office, we are seeing fewer suppliers with an end-to-end offering that are able to provide technology services to the community finance sector. As Shanika said, it's got the lowest level of satisfaction. Now, it showed up as neutral, but neutral is really not very, is not a good aspirational level to achieve in terms of satisfaction of your core system. And we've also felt that with a limited fund, if we try to spread it too wide on functionality, on what we're trying to achieve, then it's going to be quickly lost and the impact is going to be diluted. So we believe that if we would focus our investment on something very specific, loan management systems, then we're going to be able to have the biggest impact in the shortest time to really focus how we're going to address the market and market deficiency. So if you don't sort out your loan management system as a lender, then you're not going to be able to build the rest of the house. You have to get that foundation right in order to build the rest of the house, in order to build innovative technologies on top of your base level technology. And we believe that there is a market opportunity for suppliers of technology to the sector. We genuinely think that there is demand out there and that there is a gap in the market. And so to address that gap with the appropriate technology with the appropriate models, commercial models, we believe you could really make a market or build a market. And I just want to stress that whilst we're talking on this call about investments, ultimately we want to build the market. And if actually what you're looking for is not an investment, but is something else, then we're here to help. And we're open to all sorts of conversations about how we can help you to establish yourself in the market, even if it isn't an investment that you're after. So in our first round, we're going to be looking at the loan management systems. But subsequent rounds, we do intend to and expect to explore some of the niche technology providers, some of the fintechs who are emerging, who are tackling either one of those other two pillars or something else, maybe around debt advice or something else that is part of the ecosystem, but not the loan management system itself. Now, at the risk of stating the obvious or teaching you to suck eggs, I'm going to share with you what our definition is of loan management system, or what the parameters are or the boundaries are of a loan management system. And the reason I'm doing this is because, having spoken with various people, different people have different interpretations of what's in and what's out of scope of a loan management system. And the reality is it's flexible, but it has to be the core system that sits in the center of the lending organization. It manages the loan life cycle from start to finish. It is in the loan management system that interest and fees are calculated, statementing is issued. It is the position of truth. It's the database of record of all lending data, and it's from this database that reg reporting, management reporting is generated. And then within the system, there may be payments, there may be access to credit reference agencies, there may be an open banking interface, but there doesn't have to be. But what's important is that this loan management system is able to integrate with those other services, those peripheral services. And usually we find that the LMS for this sector, because of the scale of the sector, usually the LMS will also contain what's required for CRM, but not always. And some of the larger lenders will have their own distinct CRM that will be integrated into the LMS and might manage the onboarding journey, the onboarding part of the loan origination journey. Next slide, please, Nard. I'm not going to spend much time on this. This is an extract also from our survey, But I've really included in here so that when we do circulate the slides afterwards, you've got it as reference, a point of reference for what lenders tell us really matters to them when they're out selecting software, and specifically selecting software suppliers. It's really the top 4 items that are of particular interest. The first is functionality and ease of use of the system. So they just want something that is going to be easy to use, that's going to do what they need for their organization, that is secure. And then the next 2 are really about the cost, but also the agility in future development. So agility and cost of future development, and the total cost of ownership. So it's not hugely surprising, but it's important to understand what their order of priorities are when engaging with the sector. Next slide, please, Nard. So what are we looking for when we're looking to LMSs to invest in? We are looking at, from a product perspective, that the product is commercially viable, it's affordable and accessible for community lenders, that it's functionally complete. And that doesn't mean that today it is available off the shelf complete, because we might be investing in an organization that is at an earlier stage in the development, but that the end design and the end ambition is functionally complete and will serve a credit union or a CDFI and everything they need in order to operate it. That it provides efficiencies and takes out some of the manual processes in the organization, and that it delivers a positive end user experience. And that's not just the end user experience for the customer, but also for those people working within the lender. That it's scalable, flexible, that the architecture is open so that third parties can engage with the technology through APIs, that it is secure, resilient, and that it has a low risk and effort of implementation. And I know all of that sounds like just too good to be true, to be all in one in one solution. But you know, we've got to aim high, and that's what they are the things that we're looking for in the product. In terms of the supplier, we're looking for a supplier who is aligned with our social impact, our ambition for social impact, that's sustainable, financially, commercially sustainable, innovative and progressive, and open, not only the architecture, but has a culture of being open to third parties, and that is transparent, and importantly, is also fair. I'm now going to hand over, or hand back to Holly for the next piece.
Okay, that's great, thank you. So just I guess a little bit more detail on how we kind of plan to invest. We've got this initial allocation, so of the kind of, you know, the funds we have available, an initial allocation of kind of 5 million from our board to kind of focus on this area. And we are open for expressions of interest from kind of late March, so a few weeks time, to kind of late 2022. There's a, you know, we hope and expect that, you know, we will continue to be actively engaged in the sector kind of beyond that, but for this kind of pot of money, that's what the timeline kind of looks like. We will likely be making equity investments. In some cases, we might make convertible loan notes. We've got a reasonable amount of flexibility in terms of how we deploy our funding, but the expectation is it'll be equity investments rather than, say, either debt or kind of, on the other hand, kind of grant capital. Saying that, yeah, we have got quite a lot of flexibility, so it does depend a little bit on kind of what the needs of the organisation kind of are. As I mentioned before, we're really focused on organisations serving the community finance sector, which have beneficiaries living primarily in England. I don't think I need to explain that again, but we recognise that's a slightly unusual, so wanted to highlight it. And as kind of Jonathan was saying earlier, the aim of this investment is really to support a competitive commercial market in terms of the kind of the provision of LMS into the kind of community finance sector. And what this means is that any service funded by our investment must be available to all community finance providers, so no kind of exclusivity arrangements, and that also will support the number of organisations that we think will provide the best chance of success. So it might be the case that we'll invest in multiple suppliers, And I think probably kind of reasonably likely, because we think that's what's needed for kind of a competitive, kind of fully functioning kind of commercial market. And I guess going back to the subsidy rules I kind of mentioned earlier, because of the nature of our funding, we need to ensure that any private sector suppliers that we support can't make excess profits as a result of our funding. And again, we can go into a lot of detail about what we mean by excess profits, but again, just to kind of flag that that's something there as well. And I think the last thing to kind of add in is that we are extremely keen to work collaboratively with other impact investors. We recognise that lots of investors have been doing this for a while, and we kind of want to make sure that we've been as collaborative and as kind of helpful as possible for those organisations. Similarly, we'd like to see more investors broadly entering this space as well. So anything we can do there is something we're kind of really keen on. We're absolutely not expecting to be the only investor in any one supplier. We don't think that's very healthy for kind of a longer term kind of competitive commercial market, given the funding requirements that will likely involve. So if you're an investor on this call, and we know there are quite a lot of you, we're very keen to kind of work collaboratively as much as possible. Nard, over to you.
Thank you, Holly. Hi guys, my name is Nard Duin. I'm part of the investment team. I've been working for Fair for All Finance for almost a year now, and I will be closely involved in this program that we're running. On the next steps, for technology suppliers who are interested in this program and who would like to get some investment or some other form of support from us, we would like to ask you to complete our expression of interest form. We will be sending this out in a follow-up email, and we will also ask you to upload a pitch deck as part of this expression form. This pitch deck focuses on your business, describes a bit about the mission of your company, the team you're running, and also it would be nice to see how you connect to our mission and our vision. We'd also like to hear a bit more about the problem that you're trying to solve and the type of product and technology that you have created or want to create. And obviously, we'd like to see a bit more about how you've been doing up till now, using some numbers, some financial numbers, but also some commercial traction. How many suppliers how many people do you already have on the books? When these will be coming in a rolling basis, and we will start reviewing them late March, and we will then reach out to you to see if we can dive into more detailed due diligence. As mentioned, we will review them on a rolling basis. So most of the year you can submit your application, and we will still review it. So please don't rush any application. Just make sure that you're ready for it. Then, if you have any more questions or you would like to know something more, you can always contact us. The email address is our first name and then @fairforallfinance.org.uk. But please just fill in the expression of interest form, because that would really help us in our process. If you are an investor, Holly already touched on the co-invest, that we would like to see if we can co-invest and like to discuss other opportunities. Please contact me and we can set up a meeting to discuss this in a bit more detail. I would like to open up the floor now